Our agenda today is as follows. Just gives me a short introduction. Then we're going to go into the act itself and discuss the details of the act and my understanding of the law and all of the guidance that has come out since then. We're then going to have a short Q&A about the act. And so you guys can ask questions. With 20 of you on the call, I expect that we can actually unmute, and those of you who have microphones can freely ask your questions verbally. We also have a question pane on the webinar, so if you don't have a microphone or if you're just uncomfortable and would rather write it down, feel free and answer it on the, or ask your questions on the webinar itself and we'll get to them. Like I said, we should be able to get to all of them with 20 of you. We are then going to go into the basic setup inside of Vista and go through what that looks like. We're going to then take a quick accounting break and we're going to say, well, why are we doing it the way that we're doing it, and how does that affect the financial statements? How does it run through with that? And then we're going to be talking about the premium setup, and we're going to be talking about how you guys can get help from us and from Viewpoint on this. And then we'll end this with a final Q&A session where we can ask questions specifically about Vista setup, or you can more generally about the law or anything else that we've heard. The Q&A sessions are great. I definitely encourage you to ask questions on there. So jumping straight in, Silvertrex Systems, you guys are on this call, so you've heard of us somehow. We are a partner of Viewpoint. We've been a partner for 8 years now. Started in 2010. In 2012, we became a partner and have worked with them, especially with the Vista product ever since then. We have been working since this law passed, the Family's First Coronavirus Response Act. We've been working very closely with their product team over there, Greg Seitz and Gary Gilmore, who have been extremely helpful to us in proving all of our routines and making sure that we're doing things. And they've also put out all of their documentation that follows along our documentation so that we're all coordinating there. Also on the phone today, I have Jenna Bonham. Jenna is is going to be helping me today, just answering questions and fielding anything that comes through if that on the actual questions pane. And she also helps, well, in a million different ways. She's actually kind of the glue that holds this whole thing together. We're not exactly sure how we would have survived the last 2 weeks without her. So with that, let's just go ahead and jump into the act itself. So on Wednesday of 2 weeks ago, March 26th, I believe it was. Now I can't even remember the dates have all run together. It seems like it's been such a blur. I'm sorry, March 18th. Last week was the 26th. March 18th, Trump signed into law the law that Congress had passed, which was called the Families First Coronavirus Response Act. Sometimes you'll see it by its acronym, FFCRA. And in that act, it had a number of different things, but as it pertains to employers, we had 3 parts that were very important. So the first one was that it had a large impact on your business. It was the emergency paid sick leave. He's bound to end up in a webinar, but you know, maybe we'll just have to keep on going anyway. All right, what I was saying was we're just getting into the act. The first part of the act was the emergency paid sick leave expansion. And this is, if you guys are interested in going through and reading it, this is the Division E of the Act. Division E of the Act specifies specifically how much sick leave must be paid by employers. So the starting with leave taken, so the effective date of this act is April 1st, which was Wednesday of this week. Starting with leave taken on or after, not paid on or after, but taken on or after April 1st. There are 2 general types of leave that must be paid. The first one is what we're calling COVID COVID-19 employee. And in general, there are 3 reasons that someone would be qualified to take this leave. And I'm going to read directly from the act itself here and then summarize it there on the whiteboard. The first reason is the employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. So they're quarantined or isolation order related to COVID-19. Sounds like a big part of the country at this point. Second reason, the employee has been advised by a health care provider to self-quarantine due to concerns related to COVID-19. So, healthcare provider has advised to self-quarantine. Okay, and the third reason is, and this is the most broad, the employee is experiencing symptoms of COVID-19 and seeking a medical diagnosis. Symptoms. It can be just said that if they have symptoms and they're seeking a medical diagnosis, then they would fall under this COVID-19 employee. COVID-19 employee is paid out at 100% of the employee's pay. And it's subject to a daily cap of $511 per day. And it's subject to a total cap, total payout cap, of $5,110 total, which roughly translates to just under $64 an hour. So if you have someone who is getting paid higher than $64 an hour, that it does cap this amount at $511 or $64 an hour. Note that the 511 basically this comes out to 10 days of sick pay that's allowed. The second categorization under the emergency paid sick leave expansion is what we're calling COVID-19 caretaker. COVID-19 caretaker has also 3 reasons, which I'll summarize here. I'll read from the act. Number 1, the employee is caring for an individual who is subject to an order as described in the above. So caring for an individual as described above. 2, the employee is caring for a son or daughter of such employee if the school or place of care of the son or daughter has been closed, or the child care provider of such son or daughter is unavailable due to COVID-19 precautions. So son or daughter, school, or child care is closed, and the employee is therefore unable to work. And the third reason is the employee is experiencing any other substantially similar condition specified by the Secretary of Health and Human Services in consultation with the Secretary of Treasury and the Secretary of Labor, which basically means the government may add to this list, and they have the right to do so. One note on here that's very important. First of all, this first thing says caring for an individual. It does not say caring for a dependent or caring for a son or daughter. It says caring for an individual. Second part here does specifically say caring for a son or daughter whose school or child care is closed. This part of the emergency paid sick leave expansion is paid out at 2/3 pay. And it has a daily cap of $200 a day and a total total payout cap of $2,000, which also allows for 10 days. These two cannot both be used. They are mutually exclusive. So under the law, we have a total of 10 days that can be paid out. So if somebody begins by having under the COVID-19 caretaker and is paid at the 2/3 pay, for example, for 1 week or 40 hours, they have 40 hours remaining of either type. So they could then take out 40 hours on this COVID-19 employee at the 100% if they fell into that category. One of the questions that I've been getting and has been somewhat described by the Department of Labor, and I definitely refer you to the HR publications that have come out in the last 2 weeks. There's plenty of good resources on this on the web, and I'm not qualified to answer on this. They said, how do you substantiate this? And what kind of documentation is required? And I can just tell you this: the law does not specify what documentation is required from the employees. The law itself does not specify this, but the Department of Labor, which is concerned with making sure that you're paying things equitably, et cetera, has some guidance on that, and you can find that online. And of course, it's always good to have things in writing from your employees. So the other thing about this law, this portion of the law, well, the whole law, but this sick leave, is it expires on 12/31/20. So although this is an expansion of the existing FMLA law, the existing paid sick leave law, I'm sorry, this does expire and will no longer be applicable after this date. Okay, the next big portion of this, so we talked about the emergency paid sick leave. The next big portion is the expansion to the family and medical leave, the FMLA. So the emergency family and medical leave, FMLA expansion. And for those of you who are looking at the law itself, this is in Division C of the law. So this is a new clause of the existing FMLA Act. It actually just appends to this, and it allows for 12 weeks additional leave. Now, this has been a point of confusion for many people because people have heard 12 weeks and they've also heard 10 weeks. Within that 12 weeks, two things are important. The first 2 weeks, so the first 2 weeks are unpaid. And the next 10 weeks are paid. And the reason that they specify 12 weeks at all, you can just think, well, why don't they just say 10 weeks? Is because under this law, this 12 weeks, the other clauses of the FMLA kick into effect. For example, if somebody takes those first 2 weeks unpaid, then they must be returned to their position without any consequences. You can't, there's no retribution allowed, et cetera, et cetera. They have to get their job back, but you only have to pay them for the last 10 weeks. Now the first 2 weeks that are unpaid under this portion, of course, could be paid under this portion up here, because the emergency family and medical leave expansion, which is a weekly basis act, is more restrictive than the one above. So it's if you had an employee who would qualify for that, they could get that second COVID payment, COVID-19 caretaker, for the first 2 weeks, and then the remaining 10 weeks would be paid under this. So they would be paid the entire time, just under the two separate portions of the Act. So other details on this, during that 10 weeks, they are paid at 2/3 pay. And they're paid at 2/3 pay for their normal weekly hours and for their normal weekly rate. So I've had questions of, well, what does that mean if we have somebody who has a variable rate and if they have variable earnings? So variable earnings and variable hours, I'm sorry. So for example, what do you do about part-time workers who have variable hours? Basically, the law stipulates that you go back 6 months, at least the portion of 6 months that they were working, and use an average. So if they are a 20-week worker and they worked an average of 20 weeks in the last 6 months, then we would use that average and pay them an average of 20 hours. Similarly, if they're a variable pay, this can happen if you don't have an established private wage and you're working prevailing wage as a non-union company. This can also happen if you're a private company working piecework. Then the same thing applies. You go back 6 months and use the average. Use the average wage. Okay, the number of the amount that can be paid out at 2/3 pay is further limited, similar to the above, as $200 per day, and it has a similar cap as the other one of $10,000 total. So this provides $200 per day is a 5-day week times 10 days. I'm sorry, 10 weeks. So we have you have $200 a day that you can pay out, and it gets up to $10,000 total. Okay, the third section of the law, and this is the part that gets most that gets the most exciting, I guess, for an employer, is okay. What we've talked about so far is what we have to do. We must provide this for our employees, and that's similar to the existing sick leave laws and the existing FMLA law. What we must do on behalf of our employees. This portion of the federal law, so the FFCRA, is the tax credits. So this is tax credits that are allowed under the new law. And if you guys are interested, this is Division G of the new law. Okay, in Division G, we have what we talked about up above. We have different tax credits for the different categorizations. We'll talk about the COVID-19 caretaker first. COVID-19 caretaker, we can get a credit of $511 per day and $5,110 total per employee. In other words, everything we're required to pay, we can get as a credit back. The second part, and this is probably not going to come as any surprise to you. Ooh, did I say that wrong, Jenna? I think I said that wrong. The first one was employee, the second one is caretaker. I did say that wrong. This is employee. 511 per day. The COVID-19 caretaker is $200 a day and $2,000 total per employee. COVID-19 employee, we have to pay up to $511 per day at 100% of the rate. We get all of that back. COVID-19 caretaker, we have to pay 2/3 and up to $200 a day, and we get all of that back. The third one, which we're calling the COVID-19 family leave, we get $200 per day in credits back and $10,000 total. So in other words, everything that we have to pay, we get back. Furthermore, on top of these three things, we get, the law specifies 2 additional items that we can get back. So we get these caps of 511, 5, etc. per day, but we also can add the following: healthcare costs, and the employer medical costs. I'm sorry, the employer Medicare costs. So this is the employer's portion of any kind of medical plan that you have. This is the employer's portion of any of the standard Medicare payment. So how do we get this credit? Well, as specified by the IRS in their guidelines that have been published since then, we get to take this on our 941 deposit, not the quarterly report, but a 941 deposit. In other words, via our EFTPS payment. We get to reduce, so we reduce how much we pay, reduce our payment by the amount of the credit. So I wanted to just quickly do an example of this. One other note that comes into play for all of these, and this is really interesting and confusing at best, but all of this, so whether it's the COVID-19 employee caretaker or it's a family leave, none of this none are subject to, to employer Social Security tax. In other words, this reduces the excise tax, this reduces how much you have to accrue by 6.2%. It does not reduce the employee side, only the employer side. It does nothing to the Medicare tax. So you are not subject to employer Social Security tax on these wages. You are subject to Medicare, but on the Medicare side, you get to come and get that as a credit back anyway. So what does this actually look like? Let's do a hypothetical here where we have a business with 5 employees. We have money here, we have employee 1, 2, 3, 4, and 5. So we have a standard gross pay, and we'll just say across the board here that everybody is getting paid $1,000 a week. And these first 4 employees are all still working. So they've each been paid $1,000. They also have their standard deductions, so their federal withholdings, etc., and that comes off of their check, and so that what we have is their net pay, which we'll just call $800. Everybody got a net pay of $800. Wouldn't it be wonderful if we could have employees that were so consistent? On top of that, we have the employer portion of Social Security and the employer portion of Medicare. So we'll just add that on here, and that would of course be 6.2% plus 1.45%, but for sake of this, we're just going to say that that's $100. $1,100 is after that. Finally, everybody has a health plan which costs the company $200 per employee. We're a generous company and we pay for everything. So that comes out to our total cost of $1,300 per employee that we're paying. Okay, so now that we know all of this, let's look at employee number 5. Employee number 5 is taking the entire week off to care for their son or daughter who's out of school because of COVID. And so they are going to get paid under the COVID caretaker of $200 per day, and they also get paid $1,000. $1,000, and this is COVID-19 caretaker. Okay. Well, they're also going to have the standard deductions taken out, everything like that. This is going to end up with them having a net pay. So after the withholding and their Social Security and their Medicare, they're going to have a net pay of $800. However, our burden on top of this is not nearly as much as it would be. Where for the other employees, we had both Social Security and Medicare. In this case, all we have is Medicare. And then we have the $200 of medical costs. So our employer-sponsored health plan of $200. So the way that this works is that we have to pay out all of this money to the federal government, right? So right now, if you look at this, we have $300 that we need to pay for this employee, $300 that we need to pay for that employee, $300 we need to pay for that employee, $300 we need to pay for that employee, and we'll just round and we'll say it's $210 $210.45 or something like that, but I'll just say $210. So we have $300, $300, $300, $300, $300, right? And all of this gets bundled together and paid via EFTPS or your bank if they take care of that for you. And so we would have $1,200, $1,410 that we owe, according to right now, we owe to the EFTPS. So we can pull this $1,410 over here, and we start with that, $1,410. Then what do we get to take a credit on? Well, the law stipulates that we can take a credit on everything, their gross wages, plus their Medicare, plus their medical. So we get to take a full credit for the $1,000, plus we're going to say the $10 of Medicare, plus the $200 for medical. So we get to take a credit of $1,210. And so this week's weekly deposit only has to be $200. So how would that actually happen, right? For those of you guys who do the deposit on the EFTPS website, you know you have to specify how much is federal, how much is Social Security, how much is Medicare. And there has been additional guidelines written by the IRS, and so we're hoping that we can wade through those and find out that they're going to change the EFTPS website for us miraculously. We're going to be able to put in a credit amount on that website itself. So far that hasn't happened, and they do specify specifically in the law that there will be no penalties for confusion related to COVID-19. Please do not take advantage of that and only take this. Our interpretation, and this has been borne out by many people who we've talked to, is that we take this full credit and we do a weighted average against all three. So if we have our federal, our Social Security, and our Medicare, we reduce all three in weighted average proportion to the amount of the credit, and then we have a smaller dollar amount that we put in for the federal, Social Security, and Medicare. And if you're filing through your bank, some kind of upload through your bank, or if you're just typing it into your bank's website, it would be the same thing. You would just reduce all three so that the total dollar amount afterwards comes to your $200 in our example above. Okay, so then at the end of this quarter, so we're now just starting quarter 2, we're going to have to file a 941. Form 941 currently has a line on there for small business tax credit, some innovation credits, etc. on line, like I think it's the line 11 if I remember right. We expect that the IRS will give us a new Form 941 with a line on there to be able to report your total company's subject wages, and also be able to reduce the subject wages by the amount of the Social Security, for the Social Security portion, reduce the subject wages for that side, the employer side, and also reduce the amount of the payment owed by the amount of the credit. We further expect that there to be some modifications to the instructions on 941 Schedule B, so that when you report on your Schedule B how much you should have paid for each week, that you report it as the $200 and not the $1,410. Each of the various software vendors are currently going into a tailspin trying to figure all of this out, but not Vista and Viewpoint, because we think that we have it. We think that we have a plan going forward, and Gary Gilmore, who some of you guys know from some of the conferences, if you've been there, has been working with Atrix, et cetera. He's just been doing an outstanding job of making sure that the Vista customers are going to be covered for all of this. Okay, finally, before we go to questions and answers, we have the last thing, and that is unions, what to expect. 2 weeks ago when I did this first webinar, has it really been 2 weeks? It has been 2 weeks. No, not quite, a week and a half. We didn't really know what the unions were going to do. The law says that all employers must comply with this law. However, it does give an out to union companies. So specifically, they say, if your union chooses, they can provide this benefit in lieu of the employer providing the benefit. So far, we've talked to three companies who have multiple unions each, and all of those unions have declined to provide this for their membership, which leaves the burden on the employer. Frankly, from a Vista perspective, that's simpler. That just means that they are the same as any other employer, any other private employer, and all of our basic setup works for a union employer as well. If you guys have unions that have said, we're going to take care of this for you, please pay us instead, then you would have to manually set up that payment, and then also manually calculate the amount of the credit owing to you because you're paying the union on the member's behalf. But like I said, so far no unions, and this was across a sample of 9 unions, are providing this. I believe it was 9, maybe it was 10 unions. Anyways, 3 companies, and I think that they had 3 each, and one of them might have had 4 unions that they were working with. None of them are providing it. They've specifically said, we're not providing this, please provide it for our members. So that's that. And Jenna, why don't we open up the microphones to everybody, and then also if there's any questions that you guys have typed or anything, that we can take them on the, if you type it in, or if you guys just want to ask. Can you go ahead and unmute them all?
All right, everybody should be able to unmute themselves.
Okay, perfect. So over there on the little control bar, if you guys would like to say something or ask a question, feel free to unmute yourselves. Looks like we do have one question from Kathy. Thank you, Kathy. We use ADP to submit our taxes and quarterlies. Any idea where Vista and ADP are on setting up? No, I don't have any idea. I do know that the ADP integrations are mostly on the ADP side, and we would expect ADP to be coming out with some guidance on that if they haven't already. I haven't seen any, but that's mostly because I haven't been looking at ADP specifically. I would contact your ADP representative and find out, tell them that there are new earnings codes and new liability codes that you need to take into account, especially if you have an automated upload. It seems likely in my mind that the COVID earnings codes and the COVID liability codes that we're going to be showing you today would have to be manually typed into their portal. That just is my supposition. I wish I knew more, Kathy, but I would I'd love to hear more what happens once you contact ADP on this. All right, any other questions from the group? Let's see here. We have a few people who have unmuted themselves. I hope that's in anticipation of some excellent questions that are going to further everybody's knowledge. Greg Eby, don't lurk. I see you there. Whereas where all of us are probably
Working.
it is working. We hear you. We're all getting used to this work from home thing where, you know, everybody's dealing with computer troubles that they never knew existed before, with their headsets and everything across the country. Well, any further questions then? I guess I can take the silence as a no questions at this time.
Hey,
In the
Michael,
leave, yeah,
I'll
go
ask
ahead.
you a question.
Yeah.
Okay, so I know this is kind of off topic a little bit,
Go ahead.
but right now what I'm working on is SBA 7A, which is payroll related. So how's all that going to interact with what you're discussing?
Yeah, excellent question. So what you're talking about is this, if you can still see me on the webinar, this is this act, the CARES Act that passed last Friday. This was my homework last weekend to read through that. The CARES Act modified the Families First Coronavirus Response Act in some small ways. First of all, it specifically allowed for only paying up to the cap, where before, that was ambiguous before. So you don't have to pay beyond the cap, even if 2/3 wages would be higher than those caps. So that was good. But in the portion dealing with the 7A loan, which is of course the big portion of this, the Payment Protection Program, I believe the SBA has called it under
Yep.
7A. No, Payroll Protection Program. The only interaction that I've seen so far is that the wages that we pay out under the Families First Coronavirus Response Act. So in other words, COVID-19 employee, COVID-19 caretaker, and COVID-19 family, right, cannot be counted. So if you've already paid them out by the time you apply for the Payment Protection Program loan, they cannot be counted as part of your basis times which you get to take times 2.5 in order to get
Right.
the loan.
Right.
Furthermore, those can't be, and this part I get a little hazy on, but if during this time we pay under this COVID law, the Families First Coronavirus Response Act, those won't count as wages when we go to apply for our loan forgiveness. So the loan forgiveness is based on basically you keeping everybody busy. And so if people are out because of coronavirus and you're only paying them through the sick leave or the family leave, that those won't apply when calculating that percentage for the loan forgiveness. Essentially, they excluded these wages both from the basis of how much you can get, and they exclude the wages for how much you're going to get forgiven, if I understand it correctly.
So from a mechanical point of view in Vista, if I'm running COVID payroll, and then of course I run this normal payroll that's going to use 7A funds, how can I keep all that straight when it comes down to reporting time?
Well, of course, the reporting mechanisms are going to vary by lender. So your lender is going to have specific reports that they're going to want to. But the way that we have the basic setup set up, or even the premium setup, is that we have this separated by earnings code. And so using the payroll accumulations, you'd be able to exclude when you come to report this. You would use. I think that you would be able to commingle the money, and you would just be able to pay everything out of that loan. I didn't see anything in the law that says about that consult your lawyer, et cetera, et cetera. But then when you go to report and say how much wages did I pay under this, you would just say this is how much wages I paid total, and of this, you would pull that earnings report. So you pull payroll accumulations by earn code and subtract out the amount paid under the COVID earnings for the reporting.
Gotcha. Okay.
That is a fair amount of assumptions, Greg.
Sure.
Because your lender is going to have different reporting than other lenders, right? And then and everybody who's dealing with the SBA is going to have to do something similar, because it's the SBA in the end who's going to be paying off the banks when your lender forgives you the debt. So.
Right.
And the SBA yesterday did come out with what they called interim final procedures. So there should be, you can read through that. It's a fairly lengthy document, but it does talk about that loan forgiveness in some detail. Good question. Any other questions? Okay. Well, let's jump into Vista itself. I'm going to go ahead and share my other screen. And let's see here. Oh, I see. I was muted too. You must have muted me as well. Jenna, can you see example excavating here?
Yeah.
All right, great. Let's go through this step by step. So what we talked about first was the sick leave, and the sick leave in general has two different categories, what we called what we called employee and caretaker. And so I'm going to go to my payroll module, the programs, and I'm going to go to my earn code here. And my earnings code is where we're going to have our either payroll processor, if you guys are using KeyStyle or some kind of time card system, then we have the automatic earnings, I'm sorry, that you would have to enter these earnings in under an earnings code in order to say this is what it is. So we've set this up as earn code 100, COVID-19 employee. We chose earn code 100 because that was the next available. And you can see here that we have a COVID-19 employee, a rate per hour, and $1. And this is just the basic setup. And then down at the bottom, we just for our records more than anything, this doesn't actually do anything because we're not setting up as auto earnings. We just put in this limit as an annual limit of 500,110. Note that this would change if we had to, if we were using the premium setup, which actually limits this for you. It is possible to overpay your employees on this with this earnings code, and that's one thing that you'll have to instruct your payroll employees on, the people who are actually doing that. If some of you guys are probably employees, people who actually type into the PRT time card header itself. But if somebody's getting paid more than $500 a day, you will have to manually go in and change that, because that's all that we can get as the cap, and that's the limit of the Social Security exclusion. We then put in all of our deductions and liabilities, and when you add your deductions liability codes here, it's important that if you have an IRA match, that you come in and you check the subject only box here. IRA match, IRA, 401k, whatever it is, that this would be checked here. So if I jump to that code here, and I look at the basis codes here, you would want to make sure that the IRA match, it's the IRA itself, isn't it? I'm going to get myself in trouble here right off the bat. Where's my IRA? 401k contribution. that, no, it should be the match here. Okay, good. See, I'm getting myself confused that I don't even need to be. That we would have all of these things be as subject only on the IRA match. So that's kind of an advanced topic, but it means that you would limit your rate of earnings to the 1%, or it would allow for the limit, but it wouldn't calculate the -1, or it wouldn't match those actual wages. It would only match the percentage that they get off, assuming that the 401k is subject there as well. Okay, so we want to make sure that we have all of the appropriate deduction codes set up here. One trick that I've found while going through and helping people set this up is I've opened up another earnings code window, so I have two of them side by side, and I found the one that is PTO. So generally speaking, this isn't maybe true for all of your companies, but the deductions and liabilities for PTO are going to be the same for the PTO, or sick leave are going to be the same here. So for example, if you guys have a truck allowance, right? Do you give a truck, the question is, do you give truck allowance when somebody's on sick leave? Or do they only get it on regular leave? That's an employer policy, and I don't know what your employer policies are, but generally speaking, these earnings are going to follow the same policy as you have for your standard PTO or your standard sick time, standard vacation time. So you can kind of pull these up side by side and review them to make sure that your deductions and liabilities are set up correctly. So this is the earnings code 100 COVID-19 employee. This allows for that first categorization when your employees are experiencing symptoms of COVID-19 or under a quarantine or isolation order. Next, we have COVID-19 caretaker. This we've set up in, as earnings code 101. And you can see here, this is a rate per hour of 0.6667. So this is going to allow you that when you're typing in the code on the time card header, it's going to automatically take their rate and multiply it by 2/3. And then we have this here, so we can put it in. Again, this doesn't change anything on the basic setup, but we can put it in as an annual of $2,000. That's a total cap. If it makes sense for you, you can put in the pay period cap of $1,000. Again, this is just like a note for us under the basic setup, and this isn't used except for on the premium setup, at which point we've changed it to a rate per day anyway. The rate per hour of 0.667 will default in there. Now, it is up to the payroll processor to make sure that with that 2/3 pay does not go over the $200 per day. And just like I said earlier about the $511 per day. So you have to kind of review those codes and make sure those come in correctly. For that reason, we recommend when you're entering into the time card entry that you enter in a separate line per day so it's obvious how much they're getting. Then you go and do the deduction liability codes in the same way. You would want to make sure, just like we had before, that if you had an IRA or 401k match, that it was checked as subject only. Okay, so that's the two earnings codes for the sick leave, the 2 weeks of sick leave that we talked about earlier. The next is the liability codes that are associated with this. Now, what we've done is we've set up a liability code down here for each one. So we have a COVID-19 employee code here, and the COVID-19 employee code has a 704 here with a rate of -1. So what this is doing, and if you look at the basis codes here, it only has a single earnings code as a basis. In other words, this code, this liability code, is only looking at this earnings code. Well, rather, this earnings code 100. And so earnings code 100 is the basis for this liability code. We take this earnings amount, say it's $511, and we multiply it by -1. So we get a liability of -1. And then we stick it into an account. Notice here, this is an asset account that I've called in our system COVID-19 reimbursable, a current asset account. A negative liability is going to debit something, generally a liability, but because this is actually reimbursable, this is money you're going to be getting back. This is this liability is set up to track the credit that you're going to be getting back from the federal government. And so we're going to stick it into, in my case here, a current asset account called COVID-19 reimbursable. And it's going to be 100% of the wages as tracked over here. And then we're going to limit it to $2,555 per pay period. So this means that it's exactly half of the total limit that we're allowed. In other words, we're setting this up to say, hey, even if we accidentally overpay somebody over here, or we have some kind of screw up over here, we're still going to limit the amount of our liability that we're going to get paid back, the amount of our credit that we're going to get paid back over here. We did set this up as federal withholding, as a federal withholding calculation category, just to make sure that it gets calculated every single time. And we did set this up as a new liability type. So we'll get into both of the consequences of those two things in a bit. So the next earning code for sick is 101 caretaker, which we set up as a new liability here, COVID-19 caretaker. This is again a liability, still same liability type as before, federal withholding. It's going to the same account, the COVID-19 reimbursable account. It's going to be a debit there. We're going to have a -1, and we're going to have a $1,000 limit here, not a which is exactly half, or 1 week's worth of the limit over that we have here. This will allow us to make sure we cap it there. Our basis codes are set to only this earnings type. So we're going to take this earning, we're going to multiply it by -1, and we're going to stick the debit in here ready for us to get our credit back from the feds. Okay, a few notes on this liability setup. First of all, it's often that, I'm going to open up another deduction liability screen over here on this side. It's often that we use a accounts payable, automatic update to its accounts payable set up in our additional info tab. So we send it over to accounts payable, and then we just cut the check out of there when we pay EFTPS. The same thing can be done here. So if we're setting up these codes, I can come in, I can set up the additional info tab, and I just want to make sure it's set up the same way. Internal Revenue Service, PR liabilities payable weekly. It'll add that over in as an AP payment that you can then pay when you pay that same check on that side. So everything takes care of itself. Second, the liability type setup here. Now, for those of you guys who have set the payroll up back and forth, you guys all know this, but the GL account here typically specifies one side of the journal entry, and the liability type directs so there's different liability types that will be set up in general, but the liability type is what directs the other side of the journal entry. So in our case here, we're going to have a debit going to 120, a debit because it's a negative liability, and it's going to go to 120. So we have to ask ourselves, well, where's the credit going to go? And that's going to be directed via the PR department master, liability types here. So in this case, in our operations department, I have COVID-19 as a liability type, which is a new one that I created, and I put the expense. It says expense, in this case it's a credit, so it's actually a contra expense, if you will, or in my case I just stuck it to miscellaneous income. I could have just as easily said I'm just going to reduce non-job wages 600, or I could have put it to I could have put it wherever I wanted, but it does say in the law this is a denial of double benefit. This is not just reducing a liability. This does need to flow through on your profit and loss and increase your gross income. So we stuck that in miscellaneous income. In our case, you could create a new code in your other income. A lot of people want to see this as a reduction on their wherever the actual expense is hitting. And so since our expense is hitting in 600, they want to have that reduced 600, and that's also totally legitimate. So if you're setting up you have to set up a new liability type here. You also have to set up in each payroll department, you have to set that liability type, or it won't let you process your GL. Second, I talked about the federal. Third, I guess this is number 3. Federal withholding here. It's set up to the federal category withholding. This means that in the PR federal info screen, additional federal-based deductions liabilities, we have to set up these codes. 704 has to be set up here. If it's not set up here, it will not calculate. And you'll just be left wondering why you did all that setup if it's not going to calculate anyway. And before you guys panic, I do have a PDF on this on the website. I've been updating it regularly. I have a fairly major update to give you guys as of today. And that that'll be sent out following this email. All of you guys who are on the webinar will automatically get that, or if you are already on the mailing list from before. So one of the questions that we've been dealing with was, how do we deal with this Social Security taxable, non-taxable issue? And in coordination with the folks at Viewpoint, especially Gary, who's been great, you know, we looked at, okay, well, what is FICA, Social Security Employee Basis Codes? How should those be set up, et cetera? And then we said, well, these particular codes shouldn't have, I think it's 501 in our system, FICA Social Security Employer. So it's not subject to FICA Social Security Employer codes. That causes a problem downstream. In some cases, it can go negative. And the reason is that if you have medical insurance and this reduces your amount of that you owe for Social Security, but if they don't have any of these earnings codes, the regular earnings codes, they don't have any regular earnings codes and you just reduce it, it actually ends up with a negative subject amount in Vista. So you take 0 and you subtract out $100 for medical insurance, and all of a sudden the government owes you money back for Social Security. Interestingly enough, that's actually true under the new law, but much less interesting is the nasty error code that you get when that happens on Vista. And the workaround that we're working on, and I mean that has actually been, it's not just working on. I mean this is a very solid workaround that we've had. We've now tested with several companies with a Viewpoint support staff. Is we add these earnings codes to FICA Social Security Employer, like they were subject to it, but then we say subject only. And for those of you guys who run payroll itself, in employee pay sequence control, what that means, what that's actually going to do is it's going to say that we're going to have an amount here. Let's go to Carlton by, let's see if it runs here. Successfully processed. So we're going to have an amount on our subject wages, but it's going to be excluded from our eligible wages. So this is an exact example here of where we have a $940 subject wages in this particular case, but we actually have negative eligible wages. And of course, we're not actually going to get money back from them, but this would reduce the amount of the Social Security. And this is surprisingly correct that it should reduce it, because our medical expenditures reduce the amount of the subject wages, and so therefore we can reduce it on 941. Of course, they're still paying their employee portion, and so it just nets against that, right? So it doesn't make it negative overall. Kind of an interesting little fringe case. Only happens when you have earnings that would become negative because of various health insurance, 401k, that kind of thing. Not 401k, 401k is only on the federal withholding. Okay, so we will have, and that's specified in the PDF. I'm sorry, that will be specified in the PDF as updated later on today. So it's fresh off the press. And that kind of brings me to another point. If you guys are having issues with any of this, please let me know. We've been extremely grateful to all of the people who have tested this early and gone through and worked on these to come up with these fringe cases. You know, we're working with Viewpoint and they're doing their testing, they're helping with their support staff. But of course, it's, you know, it's I don't pretend to have a monopoly on all the information, and I certainly don't have a monopoly on all the setups you guys are dealing with. intercompany payrolls, multi-state payrolls, unions, different pay periods, monthly payrolls, weekly payrolls, bi-weekly payrolls, and so all of those can, of course, have an effect on the way that we have this set up. And I would love to hear about them. And I believe that they all can be handled. And so far, we haven't found one that can't, but we want to continue just working straight ahead. Okay, so I got those earnings codes set up for the sick leave. Moving on to the family leave, there's nothing real different there, and I'm going to just cruise through that fairly quickly so that we have plenty of time for questions. Earnings code, we would set up an earnings code. In this case, COVID-19 family leave here, 667 per hour. I can again put in my annual rate. This is again, unless you're using the premium setup, it's just a note for you. We add in all the deductions and liabilities just like we would have before, and we make sure that everything's set up. Right now I have it as a factor of this. You still need to make sure that once you're in the time card entry that you're not overpaying somebody if their rate is more than what effectively is 667, 2/3 more than $25 an hour. Then we set up the liability code, PR deductions and, deductions liabilities. We go and we set up the same code here. That's, what is it, 704, 705, 706. COVID-19 family leave, we have a single basis code here, 102. We have the negative. We have the pay period amount of exactly half of the total amount. I'm sorry, in this case, not half because it's 10,000, 1/10, so a weekly amount. We have a -1 here. We're still going to the same account, the current asset. It's a federal withholding, and we keep the same liability type. So this is very similar to what we had before. Of course, the main difference is that we have $10,000 as a weekly basis instead of hourly, based on 80 hours. Okay, so once we get those two things set up, we're good to go from an accounting perspective. The last thing we need to do is we need to limit the amount of leave that they can take under the sick leave or under the family leave. And for that, we set up a PR leave code, or rather 2 leave codes. So like I mentioned, the sick leave is mutually exclusive. If they take caretaker, they reduce the amount of employee they're eligible to take. If they take employee, they reduce the amount of caretaker they're eligible to take. The total for the sick leave is 80 hours, no matter which of the 2 categories they come in on. So therefore, we set up a single sick leave code called sick C19, sick leave COVID-19. We set it up as 80 hours, and I use a frequency code. This is just for auto usage. I use a frequency code of one time. It's not likely this is going to set up again. We all pray that it won't happen again. Then on the accrual usage info, I set up both earn codes, 100 and 101, type usage, rate 1 hours. So that reduces this amount here. So if they get 80 hours, it reduces the amount that they get for when they use either leave code, and it goes all the way down to 0. One of the other things that I recommend is leaving this as not allowed. You will not get paid back for anything that they go over 80 hours, so we do not recommend you allow it. And further, it's going to get very complicated if you start paying them for more than 80 hours because of the Social Security limiting thing. It should be basically any money you pay over and above 80 hours is your choice, but it's just regular pay or some other sick leave categorization, and it would be subject to Social Security wages. Then on the employee leave side, you can just come in here and initialize the employees. If you initialize all of your active employees, you can come in and make sure that they all have 80 hours available. Then I recommend using the auto leave accrual usage to actually begin their amounts. So you have to initialize them, and then you have to come in and say, on the 1st of April, we're going to use leave code sick leave here, and we're going to grab my frequency code of once, right? And we're going to initialize all of the employees with their 80 hours. Prior to doing this auto leave accrual usage, you'll want to come in and select any part-time workers. So let's just say that Holly is a part-time worker here, and we're going to want to override her hours that she has available to 40 hours if she's a 20-hour-a-week person. So rather than 80, she gets 40. And then when you initialize, it will only initialize her at 40. Similarly, for the family leave, we would set this up. We would just use a 400-hour limit, so 40 hours times 10 weeks. So we don't bother tracking the first 2 weeks of unpaid leave. We just say that they are eligible upon the 3rd week, and they get 10 weeks from there. Frequency once, we reset it yearly, although we don't really have to care about the reset because it all expires December 31st. We can go in and initialize all the employees here. I do recommend leaving off initialization on this until after they've completed their first 2 weeks and just doing it one at a time. There's no reason to clutter everything up. You can choose to have this set up on the pay stub. So if you choose to, on your PR group master, so like to say on our hourly workers, I could come in, I can add this here to my to the leave codes, and now it will show up on the pay stub. If I would rather not have this show up in the pay stub, and frankly most people are saying I don't want this showing up in the pay stub, then you just leave that off here and it won't show up in the pay stub by default. Okay, now that you guys have drunk from the fire hose, any questions on the setup before we get into the actual reporting? And Jenna, you can go ahead and unmute everybody, and you guys can also feel free and type things in.
Yep, everybody should be able to unmute themselves now.
Perfect.
I don't see any questions in the question pane.
I think they're just all stunned at this point. They're going, that was way too fast. Oh, here's a question that came in. Let's see here. What was that? Pull that up here. What about setting up any credit for the Medicare taxes? Carrie asked, Carrie Fredrickson. Well, Carrie, that's an excellent question, and you'll also note that the medical credit, it doesn't calculate here. And in my whiteboard, I said you're eligible for both the Medicare and the medical. The liability code here for the PR deductions liabilities, if we go to here, COVID-19 employee, and we go to the basis code, all we have is the earning here, which is going to calculate you a -1 times this earning. What we cannot do in the basic setup is we cannot add in the medical code because it's only the medical costs and the Medicare costs that are associated with this earnings code. So for example, and I think I have one kind of queued up here. Let's see if I can pull up an example of this. Let's see here. Here we go. So this is when Carlton By here got 8 hours of regular time and 32 hours of COVID-19 employee. We can't calculate the whole medical and take the whole medical as a credit by law. We can only take the portion, essentially 3/4 of the medical in this case, medical amount per week. And the system does not allow us to calculate that automatically. It also does not allow us to calculate the Medicare as a portion to this automatically. If we put that in the liability code, it would calculate all of the Medicare, not just the portion that is associated with COVID-19 employee. And so under the basic setup, the liability calculates the gross payroll for you, and then before you take your credit on your EFTPS, you have to manually calculate in Excel or something the medical and the Medicare portion of that credit as well, if you plan on taking advantage of that. We have looked at that and tried to find a way around it. We can't find a way around that with the basic setup. However, we have written a routine that will do that for you. So in that premium setup that we are selling, we have found a way with that. But under the basic setup, it's still possible to take the full credit. You just have to manually calculate that. And I don't know of any other way to do that. If you guys find a way to do that, please let me know. I would be thrilled. Any other questions? quiet lot today. It's probably because it's Friday afternoon. Okay, well, just jump in at any time. I'm going to go through how to calculate your credit and how to take that credit on the as a payment. And so first of all, what we have, let's see here. What we have is the PR federal tax deposit liability report, right? And that's one you guys are probably used to using to actually take this. So PR federal tax deposit liability here. And this report here, as run by standard, let's just go back. I don't know, I'll just go back to last year sometime in my test system. You never know what you're going to get. We'll see that we just grab our federal, for if we're a monthly reporter, I would do all of them. Otherwise, it would just be the single paycheck, and we just grab our total tax liability here. So all we have to do in order to calculate the amount per week of the medical and the COVID credit, and this is kind of fun. You use the same report, you just put in 701 here. So you put in the or whatever the code is that you guys end up using. So you could put in the COVID-19 employee there, you put in this there, and you put in this here. And of course, I won't get anything for this period of time, but I run this, and then this will calculate the exact gross wages in these three columns that we can take. So you can see here, just in my test system, I do have a little bit of credit that I can take, and this is the amount of the credit. So this allows me to, inform my spreadsheet. That will help you. That'll help you just calculate how much you can do it. We also created a custom report just to try to make this easy for people. If you're interested, it's a fairly straightforward report that basically just adds the COVID credit right on here, and then you don't have to do the medical and Medicare taxes for you. So I'll pull this up for you. This report grabs our adjusted dollar amount, shows us our credit here, and it reduces the federal withholding, FICA, and federal Medicare so that we have our total deposit. Now, this is not necessary. You guys can do this. You can just calculate this yourself, but this will hopefully make it a little bit easier. I do recommend when you guys calculate it yourself, make sure to keep those on a weekly basis. So like save your calculations on a weekly basis. We don't know what kind of things the IRS is going to want to substantiate, but we all know that various auditors sometime in the future might come back nosing around, be looking for fraud. In times like this, there's a lot of fraud that happens, and so you just want to be able to substantiate how you came up with this. If you're using our report, I would recommend printing this to a PDF and just saying this is how we calculated our credit, and this is how we spread it out, and that's how we took our federal deposit, and how we reduce our total deposit. One note on the law: if your credit exceeds the amount of your deposit, you can apply on the website, and they will give you a check back within 2 weeks. They promised it within 2 weeks. So we would just have that be the this report will actually allow you to run it for both of those things. Now, when you run your report for the 701 code, like Carrie had asked about, make sure you add to that your 1.45. So let's just say that this is COVID code 711 as I run it, 701 or whatever it is. I take my 5,031.49 and I multiply that by 1.0145 or 1.45%. And this is the total credit I can take for gross wages plus Medicare. And then if I can add in, let's just say that I can add in 3/4 of my $200 a week payment that I make for health insurance times, well, 3 divided by 4. And so I'd get to my total credit that way. make sure to just put that in your Excel document so you can substantiate it, and I don't think there will be any problems at all. Okay, any other questions on how to take your federal tax deposit? I think this report itself will give you everything you need. Again, I believe you're still able to unmute yourself if you have any questions, or you can ask questions on the question panel. Nothing's popping in yet. While you guys are asking your questions or writing them down or thinking about them, one of the questions I've had is what are the limitations of this? We mentioned a couple of them. One of the limitations is that we can with the Medicare and medical payments there, that we have to calculate those manually. The other limitation is that although we limit it to 2/3 wages, we can't limit the 2/3 wages to the rate per day. And then also we've gotten a lot of questions. How can we help? How can we get help setting this up? So we've been working with Viewpoint. So the support staff at Viewpoint has gotten our PDF and Gary Gilmore has helped us write that PDF to clarify things. So you should be able to follow that basic PDF setup yourself. You can also call into Viewpoint support and they can help you with the basic setup on that, making sure your basis codes are correct, etc. If you guys are interested in having us just set up everything from scratch, Silvertruck Systems, we are a small company, but there are 16 of us, so we should be able to, we're scheduling things out for next week, and we're just charging $10 per active employee, trying to make it affordable for everybody. And with that, we'll help you set up and go through your consulting of all your unique setup, because I'm sure it's unique, and also give you that custom routine that limits earnings, gives you the liability of the medical and Medicare, and also gives you that custom report. So we're trying to make it easy to set it up in the basic way, and also if you'd like to have help, make it easy and affordable to get that done. All right, any other questions before we sign off? Nothing so far. Can we call it a wrap, Jenna?
I think we'll give it another minute and give everybody last chance to ask any questions you guys might be thinking of.
Perfect. You want to sing for them or something while we wait, or?
Oh, if I sing for them, their ears would never be the same.
Yeah, but it's going to go on the website. You'd be famous.
Oh, yes. I would love to get my 15 minutes of internet fame that way.
Quiet group today. Okay, I think we'll call it a wrap. Thank you all so much for coming today. Please send me your questions or any clarifications you have. I'm going to be sending out that updated PDF. PDF as it exists now is available on our website, silvertrek.net. Big red banner at the top for the coronavirus response. Please click on that and contact us if you have any questions, and please stay safe over the weekend. Thank you.